Hi there. Welcome to a new video, where we make investing simple and fun. Today, we're exploring top 7 tips for first-time investors. If you're new to investing or want to get it right from the start, you're in the perfect place. Let's jump into the world of smart investing. These are not a set of tips that will guarantee huge returns and a market-beating portfolio. They are points of advice we think you should certainly consider before you invest your money. Tip number 1. Establish a plan. Having established that you'd like to invest your money, you need to formulate a plan, taking into consideration a few questions. How much can I invest? What can I afford to lose? What is the goal of my investments? How long am I investing for to reach that goal? Do I know all the relevant investment definitions and terminology? Tip number 2. Understand risk. Understand your risk tolerance and how you would feel if you lost some or all of the money invested. A common mistake for first-time investors is to believe they are more tolerant of loss than they actually are, so when riskier investments start to decline, they often panic and sell. Taking a considered approach to risk and reward will ensure you invest in line with your capacity for loss. Remember, anything you do involves risk. This also includes holding cash, as its buying power can be gradually eroded by inflation. Tip number 3. Be tax efficient from the start. When it comes to investing, you will likely start off with a relatively small pot, and might think tax efficiency is not a major concern. Remember, investing is a long-term strategy, and you need to consider the potential value of your investments in the future. Consider you're investing now for your retirement. By the time you reach retirement age, you may have acquired a considerable pot. If you haven't invested in a tax-efficient environment like a pension, then you may end up paying a considerable amount of tax. Ensure you are aware of this when you open an account. Tip number 4. Diversify. As different markets rise and fall, a diversified portfolio of different types of investment funds can help to stabilize your portfolio over an economic cycle. Investing exclusively in particular markets, sectors, or companies can leave you exposed to unforeseen issues occurring in one particular area. Investing across a range of asset classes, regions, and sectors helps to mitigate potential losses and maximize long-term returns. Tip number 5. Invest, don't speculate. One of the most influential investors of history, Warren Buffett, said, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." Though penny shares with their perceived potential for high returns through cancer cures or prospective oil field can be very enticing, you need to consider what the long-term future value of the company is. Very small companies can be riskier purely due to the fact they may be less well regulated than the larger, multinational corporations. It's false to think that taking increased risk guarantees you more money. You wouldn't bet on a pony in a horse race. Tip number 6. Invest regularly. Investing little and often is sometimes better than investing larger lump sums. Researching investments has shown that even professionals find it is often better to invest regularly, rather than to try time the market investing a one-off lump sum. In volatile times, you may also benefit from pound cost averaging, where by investing regularly, you seek to even out the highs and lows of the market. By starting to invest early and regularly, you can take advantage of compounding. Tip number 7. Stick to your plan. Once you start investing for the first time, you'll realize it's very hard to ignore the chatter about market movements, commodities, share tips, inflation, interest rates, dividends, gold price, oil price. It's endless and is near enough constant with globalized markets. A true investor should be looking at long-term trends and macroeconomic factors that originally shaped their plan, and always keep these as their focus. You're now equipped with the basics of investing. Remember, everyone's financial journey is unique. Your path to financial growth starts here. Liked this video? Hit the like button, share with your friends, and subscribe for more insightful content. Until then, stay smart and stay invested.